Bitcoin.
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 Well, Bitcoin has now surged to an all-time high.
Back in 2009, with just $1, you could buy 1,000 Bitcoins. Today, a single Bitcoin is worth over $90,000. That means that same dollar from 2009 would have increased your wealth by 90 million times, giving you a fortune of $92 million today. Since its debut, Bitcoin's rise has been nothing short of meteoric. It was launched in 2009 by the mysterious Satoshi Nakamoto, and in just 15 years, it's become the best-performing asset of the last 2 decades, delivering compound annual growth rate of 103%. It's now a mainstream financial heavyweight, boasting a market cap of $1.8 trillion as of November 18, 2024. Now, in the 4 weeks leading up to Donald Trump's re-election, investors poured $4.6 billion into Bitcoin's exchange-traded funds, ETFs. One of the biggest beneficiaries of this cash flow was the iShares Bitcoin Trust, a popular choice among crypto investors. What's driving this trend? It stems from Trump's supportive stance on cryptocurrencies, which has ignited a wave of excitement in the markets.
The United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done. If crypto is going to define the future, I want to be mined, minted, and made in the USA. It's going to be. It's not going to be made anywhere else.
And with Bitcoin's latest rally, it looks like his prediction of it going to the moon is coming true. But what exactly propelled Bitcoin beyond the $90,000 milestone, and how soon it will achieve $100,000? Let's explore. One major political power behind this surge has one name: Donald Trump. After his re-election, Bitcoin surged 5.5% to 93,158, marking an impressive 32% rise since the November 5th election. And it's not just Bitcoin. Ether, the smaller but mighty crypto, jumped over 30%, and Dogecoin, the meme coin fueled by Elon Musk, skyrocketed over 150%. What's driving these wild numbers? Experts point to Republican policies and Trump's support for cryptocurrency. Felipe Bacazzi, co-founder of XBTO, a digital asset platform, put it simply: the Republicans have been vocally supportive of digital assets. The market was expected to rally if they won, and rally it did. Regulatory optimism is another key factor. Lennox Lai, chief commercial officer at OKX, a cryptocurrency exchange, explains that Trump's campaign sent strong pro-crypto signals, promising to position the U.S. as a global leader in regulated crypto markets. During his presidential run, he embraced cryptocurrencies like never before, accepting crypto donations and even courting fans at a Bitcoin conference in July. Does this seem surprising? Absolutely. If you're a crypto enthusiast, you'll probably remember when he said Bitcoin was based on thin air. Trump, who was once vocal about his dislike for cryptocurrency, suddenly has a different opinion. So, what changed? It's simple: money. Trump recently launched World Liberty Financial, a cryptocurrency trading venture with his family. They introduced their own token, WLFI, which sparked scrutiny over potential conflicts of interest. Still, many in the crypto space see this as proof of Trump's commitment to advancing crypto under his administration. Now let's compare that to the Biden administration, which has been anything but friendly toward crypto. Under Biden, the crypto industry faced heavy skepticism. SEC Chairman Gary Gensler has called crypto ripe with fraud, scams, and abuses, and led lawsuits and regulations to rein in the industry. Under Biden, the SEC cracked down on crypto companies, working with the DOJ to prosecute fraudsters like Sam Bankman-Fried of FTX. The contrast couldn't be clearer. Biden kept the market on edge, and Trump's re-election became a major catalyst. But Trump is not the only catalyst for Bitcoin's rise. We're talking about another massive driver: Bitcoin ETFs. On October 17, 2024, US-based spot Bitcoin ETFs hit $20 billion in total net flows, and it only took them 10 months to get there. To put that into perspective, it took gold ETFs nearly 5 years to hit the same milestone. So what exactly are Bitcoin ETFs and why are they such a big deal? ETFs are just a way to invest in something, be it stocks, commodities, or in this case, Bitcoin, without owning it directly. A spot Bitcoin ETF tracks the current price of Bitcoin. For every share of the ETF you buy, the fund holds an equivalent amount of Bitcoin securely stored in a cold storage vault. Basically, an offline digital wallet that keeps your crypto safe from hackers. So now, instead of having to open a complicated crypto wallet or figure out private keys, investors can buy Bitcoin exposure just like they would buy Tesla or Apple stock. And more than gaining popularity, ETFs are breaking records. As of November 11, 2024, US traded spot Bitcoin ETFs held $84 billion, about 66% of gold ETFs' total assets under management. On November 7th, BlackRock's iShares Bitcoin ETF, IBIT, hit $1 billion in inflows in a single day. This pushed the total inflows for spot Bitcoin ETFs past $1.3 billion, setting a new record. IBIT's trading volume hit $4.1 billion the same day, surpassing major stocks like Berkshire Hathaway, Netflix, and Visa. And just a few days later, on November 11th, IBIT smashed through $1 billion in trading volume in the first 35 minutes of the day. With 11 SEC-approved spot Bitcoin ETFs now trading in the US, it's not just BlackRock stealing the spotlight. Other ETFs are also seeing incredible growth. According to Bitwise CEO Hunter Horsley, this kind of volume is unprecedented, and it's not slowing down anytime soon. Finally, let's talk about a huge factor fueling Bitcoin's rise: Federal Reserve policy. When the Fed cuts interest rates, traditional investment options like bonds and savings accounts become less attractive. And guess what takes the spotlight? Bitcoin and other alternative assets. What is happening is that in the first week of November, the Federal Reserve lowered its benchmark interest rate by 25 basis points, bringing it down to a range of 4.5% to 4.75%. And that wasn't their first move. Back in September, they made an even bigger cut with 50 basis points, dropping rates from a peak of 5.5%. So, what does this mean for you and the economy? When the Fed slashes interest rates, borrowing gets cheaper. Think about credit cards, loans, or even car financing. It all costs less. There's another side. Treasury and bond yields drop, which means traditional investments earn you less money. That's where Bitcoin comes in. Bitcoin is now regarded as a hedge against inflation and a preferred choice for investors seeking alternatives to low-yield assets. With the Federal Reserve cutting interest rates, investors are turning to riskier, high-reward assets like Bitcoin to compensate for diminishing returns. The equation is straightforward. Lower rates lead to lower yields, driving greater demand for Bitcoin. Add to this the political buzz and the growing popularity of Bitcoin ETFs, and it's no surprise that Bitcoin has soared past the $90,000 mark. Let's take a step back. Sometimes, cryptocurrency feels like the Wild West of finance, exciting, unpredictable, and full of opportunity. But just like the Wild West, it's not without danger. While this Bitcoin rally is extremely exciting, we need to talk about the elephant in the room, which is volatility. If you've been around the crypto world for a while, you know Bitcoin's price swings can be wild. The thing is, crypto trades 24/7, so those wild price drops can hit you anytime, whether overnight, over the weekend, you name it. Sure, you can make money quickly, but history shows you can lose it just as fast. In March 2020, at the start of the pandemic, Bitcoin was sitting at just over $5,000. Then came the tech boom, and it shot up to nearly $69,000 by November 2021. But as the saying goes, what goes up must come down. The Federal Reserve started aggressively hiking interest rates to fight inflation, and Bitcoin took a massive hit. And let's not forget the FTX collapse in 2022, which completely rocked confidence in crypto. By the start of 2023, you could get a single Bitcoin for under $17,000. Fast forward to today, and Bitcoin's back in the spotlight. Investors have been flooding in, thanks to cooling inflation and the launch of spot ETFs. Prices have surged, but let's not get carried away. Let's look at it from an angle you might not have considered: Bitcoin's impact on wealth inequality. According to a study by two economists from the European Central Bank, Ulrich Binseil and Jürgen Schaaf, Bitcoin's rise has some serious distributional consequences. To them, Bitcoin operates like a zero-sum game. Those who got in when Bitcoin was cheap, called the early adopters, reap massive rewards. But that wealth doesn't just appear out of thin air. It's funded, they say, by the losses of latecomers and even those who never invest at all. What does this mean? As Bitcoin prices rise, early investors experience a rapid increase in wealth due to growing demand. Meanwhile, those jumping in late or staying out entirely may face financial losses and reduced purchasing power, worsening social and economic inequality. To wrap up the risks, here's an interesting question. Some people wonder why fraudsters love cryptocurrency. One word: anonymity. Unlike traditional financial systems, where banks and regulators monitor transactions, crypto operates in a decentralized world. No middleman means no one is checking to see if transactions are above board. The Association of Certified Fraud Examiners, ACFE, reports that 8% of global fraud cases involve cryptocurrency. Within these cases, almost 48% are linked to bribery and kickbacks, while 43% involve stolen assets converted into crypto. For example, 2 Chinese intelligence officers were recently accused of bribing a US double agent with $61,000 in Bitcoin. Why use Bitcoin? Simple. It's harder to trace than traditional currencies, making it ideal for under-the-table deals. If fraud wasn't enough, let's talk about hackers. Cryptocurrency is a prime target for cyber attacks, with criminals constantly finding new ways to exploit vulnerabilities in crypto exchanges, wallets, and platforms. In 2022, a blockchain analytics firm, Chainalysis, reported that cybercrime linked to cryptocurrency hit a record high. What makes crypto so vulnerable? Unlike a bank account, where stolen money can often be recovered, cryptocurrency transactions are irreversible. If your wallet gets hacked, your funds are gone. No refunds, no appeals. But cryptocurrency's anonymity doesn't just attract fraudsters and hackers, it's also a favorite tool for money launderers and even terrorists. By moving funds through crypto, criminals can transfer large sums across borders without detection. For instance, ransomware attacks often demand payment in Bitcoin. Why? Because it's harder to trace than a wire transfer or cash deposit. The ACFE shows how stolen or misappropriated funds are frequently converted into cryptocurrency to hide their origin. Without tighter regulations, crypto risks becoming a safe haven for these activities. So, as the crypto market thrives and Bitcoin hits new highs, it's necessary to ask, what price are we paying for this new digital frontier? So, it's reasonable to ask, what's next for Bitcoin? Despite all the risks we've discussed, some analysts remain very optimistic. According to their analysis, 29 technical indicators point to a bull market, while only 5 predict a decline. If the flow of institutional investments continues, Bitcoin has the potential for further growth. Currently, there are 19.78 million BTC coins in circulation, and this number keeps increasing. Moreover, the market anticipates that Bitcoin will reach the $100,000 mark in the near future. For example, MicroStrategy founder Michael Saylor has stated that this could happen by the end of the year, citing growing institutional interest and favorable regulatory developments. Additionally, data from the Poly Market Prediction platform shows that a significant portion of participants believe this milestone could be achieved by the end of November. However, Bitcoin's history is full of both rapid surges and painful crashes. Each time it faced a crisis, it has consistently recovered and gained strength. Whether it will continue to grow or encounter new challenges is something only time will tell. If you're considering investing in Bitcoin, it's important to remember that it always carries risks, and returns may fall far short of your expectations. So if you liked the video, don't forget to hit the like button and subscribe to stay tuned for more updates on the ever-evolving world of finance.